All right, so being Sunday, and I think I might have said in my other video Sunday, previous to this one from yesterday, Saturday. It's actually Saturday, not Sunday. Although you're going to be seeing this video Sunday, even though I'm doing it Saturday. Are you confused? This is what we call comedy gold. It's what the French call a certain, I don't know what. Financial Times. Zero hedge. Financial Times. Sell Bitcoin because the market is about to become civilized. That's like the banker begging my wife, please have your husband come in. We want to talk to him about financial options and building some wealth. And you imbecile, we're killing it in cryptos. My husband's doing all of it. He handles all of it. Just bought a house, about to pay that thing off probably next year. Make a few payments on it, it'll be paid off. Bought an RV, Financial Times. Sell Bitcoin because the market. What is this, more Jamie Dimon FUD? Let me guess, China's going to renege. They're just talking about getting ready for NEO, which is supposed to happen Monday. They said Monday there's a big announcement coming from NEO. Didn't say what, though. Well, maybe it's the announcement that, hey, the Chinese government's going to go ahead and let loose on some of that regulation, and we're going to get back in the ICO game. It's going to be allowed now. But we saw with Chinese cracking down on the exchanges. Oh, Bitcoin goes down, all the coins go down. No more ICOs, oh, coins go down. Jamie Dimon opens his fat, manipulating mouth. And did you hear Big Swear's video the other day? I almost wanted to do my own dedication video from Zero Hedge. A subsidiary of Jamie Dimon's company, JP Morgan Chase, just got nailed for money laundering. And one of the words he used about Bitcoin was about the use of laundering. In his hate speech again, he should be tried for hate speech. You guys want Congress, you want to pass hate speech laws? Go after Jamie Dimon. Hate speech against freaking crypto. But the Financial Times talks about what? Everything old world financial. Stocks, bonds, this company, an IPO coming up. And now Bitcoin is taking the money that these people rely on in that industry to keep writing garbage articles for these people anyways. And now they're upset, I think. I think the Financial Times is just as upset as Jamie Dimon is about these cryptos. Financial Times, sell Bitcoin because the market is about to become, quote unquote, civilized. On the 31st of October 2017, we at Zero Hedge discussed the announcement that the CME Group was responding to client interest and launching a Bitcoin futures contract before the end of this year. CME Group stated that the contract would be cash settled based on the CME CF Bitcoin reference rate, a once a day reference rate of the US dollar Bitcoin price at approximately 4 p.m. London time. In the run-up to the launch of the futures contract, the Financial Times has written a piece on the likely impact of futures trading on the Bitcoin price. The title of the piece makes the Financial Times view clear. Prepare to bet against Bitcoin as it becomes civilized. We disagree with using the word civilized in the context, see below. But here's the FT or the Financial Times take. In recent years, Bitcoin has been the Wild West of the financial world. Now, however, it is being civilized a touch. In coming weeks, the Chicago Mercantile Exchange plans to start listing Bitcoin futures with a centralized clearing mechanism. CBOE Global Markets may follow suit. That will enable investors to bet on the coin's future value while actually holding it, just as investors can use the Chicago Exchange to bet on hog prices, say, without ever handling a pig, or barrels of oil without actually having to deliver or touch a barrel of oil, or precious metals, bet on them. Almost nobody ever demands delivery. We can't deliver it even if we wanted to, technically speaking, if enough, contracts were out there demanding delivery. But since they don't, and when they do, we start crushing the price to stop them out of their contracts. Have nothing to worry about. We set the price we want. This is a little different. So, now granted, I'm going to say, well, if they're going to have futures contracts for Bitcoin, and I don't know the ins and outs just yet, but If I were to go back on my Options Express account, which I haven't touched since 2008 after getting crushed by JP Morgan, the manipulation of the futures contract of silver, and got crushed on that one. Does that mean that whoever's sitting on these paper contracts, if you quote unquote demand delivery, you give them the excess money to buy the contract out like normal, and then they send a Bitcoin to your wallet? Because think about that. Now, if you want silver or gold or a bushel of corn or something, demand delivery, they're going to have to, you got to hire a truck, and the truck's going to have to, you know, armed guards going to deliver it to you. Or they'll just deliver it to the certain warehouse, so to speak, and you pick it up there, or some broker, whatever. But this is Bitcoin. So if you have a futures contract and you want to buy it out, someone's going to go have to buy that Bitcoin. And it's going to be very interesting to see if the CME group is shown for the fraud that it pretty much is, the whole COMEX exchange. In that, let's say there's a bunch of futures contracts out on Bitcoin, and the price is exploding at that moment, but everybody got in their contracts when it was down here. Now they've made huge profit. For whatever reason, again, they want to just buy out the contract in full. I want my full X number of Bitcoins. I want to buy this thing out and own it. They, if they didn't already own it, which they normally don't, the COMEX, will have to go out at that moment in time and go buy it to make good on the delivery. Now, the right way of doing this would be if there's a contract out there for, and there's 2,000 Bitcoins, and there's, let's just say each contract's worth 1 Bitcoin, 2,000 contracts, 2,000 Bitcoins. They wouldn't purchase the Bitcoins. They exist for sure within that CME COMEX system. Therefore, if the price they bought it at today, in other words, let's say Monday they open up the CME to do this, which I'm just making this up. Monday they open up, okay, futures contracts are available, and we've got X number of futures contracts for this. They better have purchased X number of Bitcoin on that exact same day when those contracts were printed, so to speak. Because God help them if they don't print them and they're used to not really buying the stuff. So if they print those contracts and they didn't buy the Bitcoin, and then you're able to actually buy out the contract and say, give me my Bitcoin, then they're going to have a problem. However, there's something interesting here. And here's the key. On October 31st, 2017, we discussed the announcement that the CME Group was responding to client interest in launching a Bitcoin futures contract before the end of this year. CME stated that the contract would be cash settled. FYI, translation, you will not be able to demand delivery. They already knew it. Guys, we're not going to be able to play this game that we've played with gold, silver, future, all these things. We can't play that game with Bitcoin. Well, then create a contract in which you cannot settle for the physical, or in this case, digital Bitcoin being sent to these people who want it. Nope. It is a purest form of a freaking rotten derivatives contract. It's a bet on a bet on a bet. And if you win, here's your cash. If you lose, you owe us the cash. Which means what? People are going to be crushed. You think I got hit bad? $20 silver in 2017 or 2008, excuse me, down to 16 something, 17 bucks. Account gone, $4,000 gone, 4,500, and you owe us $500 more to make this whole. I don't get anything. I don't even get any silver out. Nope, your paper contract's been liquidated. No stops were available. I mean, your stop triggered, but no one was available to buy. You lose. So again, these are usually leveraged products, and with the crazy insanity high prices of Bitcoin, the leverage is going to be crazy, I'm sure, which means there's going to be enormous profits in US dollars being made based on the price movements of Bitcoin. Having said that, listen to me very carefully if you think you want to play this game. The volatility we've seen goes down too, and it goes down hard as well, right? You will be potentially crushed worse than you might ever imagine on some volatility in these coins. In this case, Bitcoin specifically, because that's the contract. It's for Bitcoin only. Although I would say there should be some people, you put some stops in place, there should be some buyers. But again, you may say, well, hold on. Because the banksters are going to get in here, right? They're going to probably try to manipulate that COMEX like they always do. And if the price of Bitcoin is up and then it starts crashing down, hundreds of dollars down. Oh my gosh, stop triggered. Sorry, not enough buyers on the COMEX market. Your stop's triggered, but no one's buying. The price is going down, and you're getting crushed. Meanwhile, you say, well, let me look at the other exchanges across the planet. Massive volume, buy and sell. Matter of fact, there's buy and sell orders all over the freaking place here. Buy and sell, buy and sell. There's on Bittrex, they're on Coinbase, everywhere. Huge buy and sell orders. But on the COMEX, you're telling me I got stopped out and there were no buyers. Well, that doesn't have anything to do with those other exchanges. This is our exchange only. So if there's no buy and sell futures contracts happening right now, that's why you got stopped out. Right? You risk that. I'm not going to say that I know that's going to happen, but we've seen it happen in other things that that entity has dealt with. So I would say, why wouldn't they do it with this? The banksters have something to play with. The big boys are going to come in and play over in the COMEX market, and there's going to be some serious profits made and serious profits lost and destruction. If you want to play that game, I would normally think the day that you hear futures contracts available on the CME exchange Monday, December 3rd, whatever. So much money is going to flow into there. It's probably going to go way. In other words, there's probably going to be some huge profit immediately, because everyone's going to jump in with both hands and feet. However, the smart traders may anticipate this. And if there's a bunch of selling of the futures contracts of Bitcoin on the COMEX market, it can say that the price in Bitcoin on the COMEX market futures is supposed to be $8,000 everywhere else, and it is $8,000 everywhere else, let's just say. But on the COMEX market, this futures market, there's a whole bunch of paper being dumped for some reason, and the price on the COMEX is down to $6,000. But the rest of the world says that's a fraud. It's $8,000 over here. We understand that, but our price mechanism is set here, and although it's based on the price of those, buying and selling futures contract is, again, betting on the future price of a product, in this case, Bitcoin. So our traders are basically selling off or whatever, right? Again, I think people are going to get burned over there one way or the other. But I'm telling you now, you're going to hear stories of people making a killing. And you're probably going to hear the opposite. I got a massive margin call. I didn't even put that much money in it, but the damn thing fell so hard that even my little bit of money is gone, and now I've got a margin call, which is, excuse me, sir, you owe an additional, oh my God, how much? Because it was leveraged, and yes, your stops are triggered. You agree to the terms and conditions, and if you don't, we'll go after you and sue you. That's how that goes. I'm not playing ever again on the bankster's court. I learned my lesson in 08. I thought I could get physical, silver. Let's get physical. Upside down. Physical. Let you hear the pandas talk. The Chinese pandas talk. I'll get physical, and then we'll, everyone else is going to be buying, and we'll finally, maybe we can break the back of the comic. Nope. Price keeps getting set over there, no matter what. Up 17, up 32 cents, almost 18 again, down again. Again, I still believe it's going to fail. The price will be let loose at some point, which is why I'm hanging on to my stack, bro. But this is utter nonsense. It's a little bit of a length, I could read a bunch more of this, but, Zero Hedge Engine says, for this reason, we don't agree that adding a futures contract will necessarily civilize Bitcoin. Indeed, it might have a positive, opposite effect. The second scenario precisely describes the state of the gold market today. According to the Reserve Bank of India's estimate, the ratio of paper gold trading to physical gold trading is 92-1, meaning that the price of gold on the screens has almost nothing to do with the buying and selling of physical gold. This makes the gold market, and therefore the gold price, something of a mockery. As Zero Hedge has highlighted time after time, the gold price, if you rise, I will manipulate you, you will fall down. Time after time. The gold price has frequently been subject to waterfall declines as huge volumes of gold futures are dumped onto the market with no regard for price. See, gold slammed after someone pukes 4 billion notional of gold futures on November 10th, 2017. Perhaps the Financial Times journalist Gillian Tett could write an article on gold instead of Bitcoin, explaining how the price of the former, a widely viewed indicator of financial risk, is being suppressed by derivatives trading. Indeed, Tett was present at a private dinner in Scots of Mayfair several years ago when the Gold Antitrust Action Committee gave a presentation on exactly the same process which she expects to lower the Bitcoin price. Exactly. Because it is their duty. Like, you know how I'm getting angry at these people on YouTube for scamming everybody with these Ponzi's? And I'm calling these people out for, hey, DJ Nagy, Craig Grant, Trevon James. I'm calling them out. That's what these people should be doing. I'm calling them out because I can see it. Hey, look at these guys. These guys are scammers, right? Look at this. Financial Times, it's their duty. Why? Because they need your money to go into their fraudulent financial system so that their banksters and the JP Morgans and the Goldman Sachs and all these Citi, Deutsche Bank, all of them can go rig the markets. How many cases have we heard over and over again now? Guilty, manipulating the silver price, the gold price, this price, the Forex. Pay a little fine, pay a little fine, pay a little fine. I wish I could manipulate something, make $2-3 billion on it, pay $500 million in fines, walk away with a couple billion in my pocket anyways. That's a cost. That's a business. That's a cost of doing business. As far as I'm concerned, I'll keep doing it. Even though I'm crushing and ruining other people's lives in that matter. Who won't even hear about it. Won't even know there'll be a class action. There probably won't be. We'll settle with anybody anyways. Put another couple $100 million in there. It doesn't matter. Most people don't know. They're not going to join the class action because they know they'll get pennies on the dollar anyway. It's not worth their time. And we know this. So we're going to crush them. And we need our talking heads on the news, the big reporters, the Financial Times, to push our agenda and tell them about our products. Keep them back in our product. Don't let them go over to Bitcoin and cryptos. The little guy's going to make a killing. We can't manipulate that. They're making a killing. We need something we can manipulate, pay a fine, never do jail time, and keep taking the money from them and offer them a percent of interest in the bank. How about a treasury? How about a savings bond? Get the hell out of my face. How about some cryptos? We getting rich. Take care.